Welcome to Econverse, a podcast that breaks down the biggest economic trends and current affairs shaping our world. In this podcast, we cut straight through the headlines to reveal the real impact of economic shifts on businesses, governments, and most importantly, on you. So get ready, tune in, and join us as we make sense of the economy, one episode at a time.
Welcome back to Econverse, everybody. Today we are diving into the Indian stock market. And it's been a pretty wild ride this year.
Yeah, it has.
Even if you aren't actively trading, just keeping your finger on the pulse of what's happening in this market, I think really gives you a good idea about the health of the Indian economy. And to do that, we've got some great sources. We've got articles listing the top losers. We've also got a warning from the economic survey, which we'll get into later, and a whole bunch of experts weighing in on what they think is causing all this volatility. So let's get into it.
All right, so to kind of set the stage, the markets have been volatile. The sensex has slipped about 12% from its peak this year. And the Times of India pointed out that we're actually in the longest downward trend since 2019.
Yeah, which is a little bit concerning.
Yeah, and what's interesting is this downward trend is hitting the small cap and the micro cap segments the hardest.
Yeah, those smaller companies tend to be a lot more volatile in general, so that makes sense. Yeah, and the Financial Express has two articles about this that kind of really bring this to life.
Yeah.
The first one names the top 5 sensex losers of 2025, and those are Zomato, NTPC, Power Grid Corporation, Adani Ports, and ITC.
Wow, some pretty big names on that list.
Yeah, some of those names might not be familiar to everyone, but in the Indian market, these are some major players. And it's not just like little dips. We're talking double-digit percentage drops. Zomato, for example, they have plunged almost 21% since their initial listing. But the thing is, this isn't just a Zomato thing. This is really a symptom of that larger market correction that we're seeing.
Right, it's definitely part of a bigger picture.
Exactly. And the second article from the Financial Express, it highlights a slightly different list. This one focuses on the 5 companies with the biggest market cap declines on the BSE 100.
Okay.
So those are Siemens, Tredver Beverages, Geo Financial Services, and Adani Green Energy.
Another interesting mix of companies.
And again, we're seeing some pretty dramatic drops. Siemens, for example, their market cap shrunk by 47%.
47%?
Yeah, that's huge.
Yeah, what's going on with Siemens?
Well, their share price has plummeted almost 25% just this year.
Wow.
And there are a couple of things going on there. Global economic headwinds, fierce competition in some of their key sectors.
So kind of a perfect storm?
Yeah, it seems that way. And, it's easy to get fixated on individual companies, but these losses are really just the tip of the iceberg. They reflect broader trends impacting whole sectors of the Indian economy.
Exactly. And to really understand those trends, we need to zoom out and look at the bigger picture. And that's where the economic survey comes in.
Right. It's like the annual report card on the Indian economy.
Exactly. And this year it's waving a pretty big red flag.
It is. And that flag is a warning about a potential meaningful market correction in 2025.
Okay, that sounds a little ominous. Meaningful market correction.
Yeah.
What exactly does that mean and why should we be worried?
So essentially what they're talking about is a significant drop in stock prices across the board. And they're saying the U.S. markets and their optimism are a potential trigger.
Oh, so it could be a domino effect. U.S. market stumbles, and then India feels the aftershocks.
Right, and the implications of that are pretty significant. The survey also points out that there's this influx of new investors that came into the market after the pandemic.
Right, a lot of first-time investors.
Exactly, and they haven't experienced a major market downturn, and they might panic and start selling if things start looking bad.
Oh, so that's a whole new generation of investors who haven't really been tested by the market's ups and downs yet.
Exactly, and if they overreact, that could exacerbate the downturn even further.
That's a really interesting point.
And they also highlight a concerning trend, and that's the growing correlation between the Nifty 50 and the S&P 500.
Okay, so the more those two markets move in sync, the more vulnerable India becomes to the fluctuations in the U.S. market.
Exactly.
So we've got these warning signs from the economic survey, but what are the experts saying about what's actually driving these market trends?
Well, Fortune India and the Times of India have some pretty interesting analysis on that.
Okay, well, let's dive into those. All right, so let's get into those expert opinions then.
Yeah, so we've got 2 key articles here, one from Fortune India and one from the Times of India.
Yeah.
And they both kind of offer some insight into what's driving these trends that we've been talking about.
Yeah, all right, let's start with Fortune India. What do they have to say?
So they actually highlight a concern that a lot of people have been talking about, and that's the high valuations in mid-cap and small-cap stocks.
Oh, yeah, I've heard a lot of chatter about that. It's like paying a premium price for a car that's not going to get very good gas mileage, you know?
Yeah, exactly. So these companies, they're trading at prices that exceed what their earnings justify.
Right, and that makes them particularly susceptible to these corrections, right?
Exactly, like a bubble that's waiting to burst.
And then everyone realizes, oh, these companies aren't actually worth what we're paying, and then boom, everyone starts selling and the prices plummet.
Exactly. And to add to that, we have foreign institutional investors, FIIs. They're pulling their money out of the Indian market.
Yeah, that's right. Sustained selling by FIIs is definitely adding to the downward pressure on prices. Classic supply and demand, right?
Exactly. More sellers than buyers means prices are going to go down.
It's like everyone's heading for the exits.
Yeah, and then we have the big elephant in the room, the looming global trade war and Trump's tariff plans.
Right, those are definitely spooking investors worldwide.
Yeah, geopolitical uncertainty is a major driver of market volatility.
Yeah, for sure. I mean, when trade tensions are rising, investors get more risk averse and they don't want to invest in emerging markets as much.
Right, it's like this dark cloud hanging over the global economy, casting a shadow on everything. But, before we get too swept up in all the negativity, the Times of India does offer a glimmer of hope.
Okay, so what's the silver lining?
Well, they have an expert prediction that suggests a recovery might be on the horizon.
Oh, okay. Tell me more.
So this expert believes that the market's likely to bottom out and start recovering in the first quarter of the next fiscal year.
Okay, so they see this as a temporary thing, a little blip, rather than a long-term trend.
Right.
So a
It's
light at the end of the tunnel.
maybe, but, market forecasts are not guarantees.
Oh, yeah, for sure. It's like trying to predict the weather.
Exactly. You
Mm.
could look at the forecasts, but ultimately, Mother Nature's going to do what she wants.
That's a good point.
And the Times of India also highlighted a really fascinating shift. They pointed out that individual investors have been stepping up their participation in recent years.
Oh, really? That's interesting.
And combined with strong mutual fund participation, that's actually compensated for some of those fluctuating FII outflows that we were talking about.
So do you think that means that the Indian market is becoming more resilient to these global shocks because of this domestic investment?
Well, that's a tough question.
Yeah.
While individual investors are definitely providing a buffer, I think we still can't ignore that historical correlation between the Nifty 50 and the S&P 500.
It's like we're trying to break free from a dance partner, but we keep finding ourselves doing the same steps.
Exactly. It's a delicate balance, and we'll just have to see how it plays out.
Yeah. So time will tell.
So before we move on, I wanted to circle back to those top losers for a second.
Okay.
The Financial Express articles actually had some really interesting company-specific details. So, for example, Varun Beverages, they're responsible for bottling and distributing Pepsi products in India, and their market cap has dropped by 28.5%.
Wow, that's a lot.
Yeah, and that reflects the challenges that the consumer goods sector is facing right now.
Right, because consumer spending is down, which impacts companies like Varun Beverages directly.
Exactly. And then there's Geo Financial Services. They're hourly expected to join the Nifty 50 index soon.
Oh, wow, that's huge.
Yeah, so that should bring in a wave of investment.
Right.
But even with that, their market cap has still fallen 23.6% since the beginning of the year.
So even companies that are poised for growth aren't immune to the current market volatility.
It really is a wild ride out there.
Mm.
And I think we should move on to the economic survey now. I thought their analysis of investor behavior was particularly insightful.
Oh, yeah, especially their point about the new investors who came in after the pandemic.
Yeah, who might not have the experience to navigate a major market correction.
Right. It's like learning to swim in a calm lake, and then all of a sudden you're in the middle of the ocean.
Exactly. It's jarring and disorienting. And the survey suggests that that could have a huge impact on spending and market sentiment overall.
Oh, yeah, for sure. If those new investors panic and start selling off their holdings, that could create a ripple effect that impacts the whole market.
Exactly. It's a classic example of how investor psychology can actually influence market dynamics.
Absolutely. And the survey also touched on that increased correlation between the Nifty 50 and the S&P 500.
Yeah, and that's a really important point. The closer that correlation gets, the more susceptible India becomes to fluctuations in the U.S. market.
Like two dancers moving in perfect sync, one stumbles, they both lose their balance.
Precisely. And it makes it even more important for investors to keep a close eye on global economic trends. So we've covered a lot of ground here. We've looked at the market overview, those big market cap losers, the warnings from the economic survey, and even some expert opinions. But I think it's time to take a step back.
Yeah.
What does all this mean for someone who's interested in investing in the Indian market right now?
Well, I think it highlights how important it is to do your research
Yeah,
and also to have a long-term perspective.
right. Don't just jump on the bandwagon or panic and sell when there's a little bit of a dip.
Yeah, exactly. It's about understanding a company's fundamentals, their long-term growth prospects, how they fit into the larger market.
And I think diversification is always important.
Absolutely, spreading your seeds across multiple fields.
Exactly.
If one crop fails, you got others.
And remember, market corrections, they're just a natural part of the cycle.
Right.
Don't let fear make your decisions for you.
Instead, look at those corrections as an opportunity to buy some quality stocks at a discount,
Right? Patience and discipline, those are key for any investor.
especially in turbulent times.
Well, that's a wrap on our deep dive into the Indian stock market roller coaster. I hope you found this journey insightful. You know what's really interesting is how this whole deep dive really revealed how interconnected the global economy is. I mean, the Indian market is definitely influenced by domestic factors, but it's also tied to these global trends.
Right. It's all connected.
It's a reminder that understanding economics, you need a global perspective. And that's what we're trying to do here at Econverse.
Help you navigate all the complexities
Of the economic world.
wherever you are in the world.
So stay curious.
Stay informed.
Keep exploring the fascinating world of economics with us, and we'll see you next time on Econverse.
That's a wrap for this episode of Econverse. If you enjoyed this episode, make sure to subscribe to the podcast on Spotify, Apple Podcasts, or wherever you're listening right now. And if you're watching on YouTube, don't forget to hit that like button, subscribe, and turn on notifications so you never miss an episode. We'd love to hear from you. Drop a comment on YouTube or leave a review on your favorite podcast platform. It really helps us reach more listeners like you. Thanks for tuning in, and until next time, stay curious, stay informed, and keep exploring the world of economics.